Well, joining us now on the ETF show from T. Rowe Price is head of exchange traded funds, Tim Coyne. Well, first, Tim, how have things been going for T. Rowe Price ETF since we last spoke?
Hi, Jack. Great to see you and great to be here. What's new at T. Rowe Price? At T. Rowe Price, we launched our first active ETFs in the year 2020. Since then, we've expanded our ETF catalog and currently have 15 ETFs in market, 10 equity funds, 5 fixed income ETFs. And our ETFs really fall into two main categories. First is ETFs that are based on long-standing strategies that we have made available to investors in the ETF format. And then we've also developed new strategies that we've developed to be delivered as ETFs. So we've seen demand continue to grow across U.S. advisors and really starting to see our AUM accelerate. And as we think about constructing our product suite, we're also looking to, at filling the void in areas of the market where investors have historically used active management, but have had limited choice in the ETF wrapper. A couple of examples there would be small mid-cap. We have a small mid-cap ETF. The ticker is TMSL. International. We have our international ticker TOUS, and high yield and ticker TH. YF, I think, are good examples of how we address this. And our plans are to continue to expand our ETF offering this year and really view ETFs as a strategic initiative for our clients and for our firm.
Overall, how has the market responded to active ETFs?
I would say enthusiastically. We are getting a lot of questions from advisors on how they should think about incorporating active ETFs into their portfolios, which is really exciting because I think it indicates that we're just scratching the surface in many ways. And I think this is a function of the fact that advisors have been primarily constructing ETF portfolios that are passive, rules-based. So we've been engaged on how active bottom-up fundamental strategies can be additive to the overall investment process. And the good news is the conversation has really transitioned. The focus now is on the strategy level and how to incorporate our funds into a broader portfolio application. So really a pivot is towards more due diligence type conversations and products are being much more, through the evaluation process. So I would say advisors also are looking more closely at their indexed ETFs that they're investing in. And for example, looking at large cap growth, last year we saw a significant diversion between two of the largest large cap growth index ETFs, and that is where we feel an active strategy, in our opinion, can add value and should be viewed as an alternative to simply owning a passive ETFs. And advisors are really leading into the active ETF conversation.
So, where are you seeing some of the most client interest across your product suite?
So, we've seen strong demand across the entire suite. Year to date, 14 of our 15 products have seen positive inflows. Last year, 15 of 15 products had positive inflows for the year. And our overall ETF is up nearly 300% over the last 12 months. A couple of funds to note, TCAF, which is our capital appreciation fund managed by David Giroux. We've seen $1.3 billion growth since inception last June, and TCAF is one of the fastest growing ETFs launched in the past year. This is a fund that invests roughly 100 large cap U.S. equity name. It's benchmarked against the S&P 500, where David and team are performing bottom-up fundamental research. And I think this is a really good example of T. Rowe Price bringing our best ideas and leveraging our extensive investment capabilities to deliver high-quality ETFs while addressing relevant challenges to investors. Another fund that I would highlight is the small mid-cap, and TMSL is the ticker there, and that represents an area of the market that advisors have been limited in terms of choice from an active ETF perspective. And T. Rowe Price, in terms of our experience, we are the largest manager of small mid-cap assets in the U.S., and this fund is very competitively priced at 55 basis points and roughly half the average fee of a small cap, mid cap mutual fund. So this is an area that's been really dominated by passive with limited choice of active strategy. So we think there is a compelling case for active here. And, this fund has had strong performance out of the gate. with consistent flows, competitive fees, and as I mentioned, T. Rowe Price is the largest U.S. manager in small mid cap space. So while it's a new strategy, it's not a new asset class or capability for T. Rowe Price.
Finally, Tim, where do you see active ETFs going from here?
Yeah, I think there is a bright future for active ETFs. At the industry level, the active ETF space is quickly expanding and continues to grow in terms of AUM and in terms of the number of products coming to market. And just some industry stats, there's roughly 400 active ETFs that have been launched over the last year. And over the last 3 years, active ETFs have represented close to 60% of all new ETFs launched in the US. And in terms of flows, they're certainly outpacing their passive funds. And active ETFs represented 22% of the industry flows last year, while only having a 6% market share. So we're really excited about the expansion of our product offering over the last year, and really starting to see acceleration and adoption of our funds more broadly speaking. So a lot more to come here. I think very early days in terms of the adoption of active ETFs. And I think this will continue to be a significant growth area within the asset management industry.
Well, Tim, thank you so much for joining us today. And thank you to everyone out there watching. Once again, that was Tim Coyne with T. Rowe Price. I'm Jenna Dagenhart with Asset TV.